Time now to get a global voice on the show. Stuart Winchester, who is the Senior Portfolio Manager of Allianz Global Investors Asia Pacific, now joins us from Hong Kong. Good morning, Stuart. Good to have you with us on Morning Mantra. To begin with, funds were overweight on China at the start of the year and underweight to neutral on India. Is that likely to change?
Of the two markets, I think China will probably bear fruit quicker than that in India, in part because India is struggling on the political front that has in fact beginning to exact a higher risk premium. So I think China has a better opportunity and also a more diversified economy, if you will, than India.
Right, and Stuart, where do you see India from a 6 to 12 month time frame? Do you see India exposure reducing amongst the funds?
I think India will be flat to down, most likely down, unless, of course, the political situation changes there. Valuation isn't terribly attractive at this point, and hence I would not want to be investing aggressively in India. So my suspicion would be that funds will probably reduce their exposure to India over the coming months.
And Stuart, what sectors are drawing your attention in India, given that we are stepping into the earnings season?
There are three sectors I think you'd want to look at this point. Banks, in part because they have been more prudent, some banks certainly more prudent on their lending. And also I think the opportunity for banks, if they are lending into the middle class and lower middle class parts of society, that's quite good. Tied into that, of course, is consumer staples. There is wages have been increased, and I think that favors, again, the lower middle class people. And so consumer staples is one area of interest. And then finally, cement. I think cement looks interesting here because of the improved supply-demand dynamics.
Right. So, Stuart, consumer staples and cement is something that you like, but if you talk stock specific, then which are the two stocks that you would pick, either in the large cap or the mid cap sector across India?
Well, certainly we would prefer the larger, higher quality names. So ICICI Bank would be one name, and an ITC in the tobacco sector.
All right, and what's your view on commodities, especially gold and crude?
Well, crude oil, I believe, at this time is overvalued. It's being buoyed by uncertainty in the Middle East, for one example, and I think that's not sustainable. Certainly, crude probably should steady in around the $90 to $100 level. And with respect to gold, I think gold itself is an interesting asset. For those that want to believe it's an asset, there are some that don't, but I certainly think it's an asset because it represents an opportunity set you can look at and invest in. And it's interesting here because on one hand, it's been buoyed by this financial uncertainty, this movement toward debt proliferation and now debt deflation, which I think takes away from the currency. So you have a debasement of currencies. And on the other hand, you have this inflation. And the second part of this argument is yet to really occur. So it may be that gold's lackluster for a while, maybe this year into next. But again, on a 2 or 3 year view, if I'm at all right on the inflation implications that are taking place at this time around the world, then I would look certainly for gold to continue to be a better performing asset on a 2 to 3 year view.
Right, and Stuart, besides gold, before we let you go, we would also like to get in a word then on the US dollar. We've got the dollar index, trading just about flattish right now, but it was quite on a buoyant note on the back of Eurozone troubles. But what's your view on the dollar as a safe haven currency?
The dollar itself is probably going to hang in there, simply because other currencies also have some issues with them. Longer term, the fate of the dollar will be determined by how well the U.S. deals with its own deficit.